following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, and sprinkled on top, just a little dash of insanity/hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the ever-expanding Options Insider Radio Network, upon which many of you are listening to this fine program right now. And before we dive into the show, let me just remind you one final time, if you're listening to this tomorrow morning, that is the final day to register for the Options Insider Unusual Activity Forum. It's going to be this Wednesday at the CBOE. If you're in the Chicago area, you really need to get on down there. We have a couple of seats left, but they'll probably be gone by tomorrow. So hopefully you move pretty quick and snag one of those last seats. Listeners, you can find out more, theoptionsinsider.com/events. I had someone call us up the other day and say they didn't believe this event was real. They said, really, $99 for all that stuff? They had to call to confirm that it actually exists. And we said, yeah, it's legit. This is, you can actually come and get all this craziness for $99. Plus, I just got the catering bill the other day, or the estimate, and it's going to be quite the spread. So come and feast on us for $99 at the very least. You'll get some good food and a nice floor tour, and hey, maybe you'll learn a thing or two along the way. TheOptionsInsider.com/events to learn more and claim one of those last couple of seats. You can see myself, of course, Mr. Sebastian from Option Pit, Dan from Market Taker, a bunch of other guys, Henry from Trade Alert, and Stefan, the co-founder of LiveVol, and Matt, the co-founder of Option Vision there, and ORATS and Acumen. So a lot of great people coming in to really dive deep. And as far as I'm aware, this is the first time anyone's ever done any event like this, certainly a live event with this many people in one room, focusing on the realm of insider trading and unusual activity and options. So if you like what we do here on the old Odd Block, now is your chance to check it out. And speaking of checking it out, let's check out the rest of my panelists, starting off with the man fresh from the big Options Express event this weekend, good old Alex Jacobson, the Viceroy, they call him over there at Options Express. Alex, welcome back to the show, sir.
Yeah, thanks, Mark. Really looking forward to Wednesday. We had the big event this weekend, 500 people, and lots of Schwab folks in. And the funny thing, at one point, one of the Schwab guys comes running up, and he was from the managed money side. And he said, somebody's asking me about a trade that I've never heard before. I've heard of butterflies, condors. And he looks at me and he goes, what's a Viceroy? And I said, I'll take that one.
That's awesome. See? The OX love continues to these events out in the weekend. I want to hear more about that, but that's pretty funny. I like that. Maybe we need to construct some sort of a Viceroy trade. I know the Tosaw trade would clearly be the call stupid. I don't know what the Viceroy trade would be. I'll have to mull that over a little bit. Maybe some crazy ratio swap on something. I'll work something out for the next show, Alex. Don't you worry.
No, the Viceroy trade is funny. says, listen, when the stock is so cheap, don't buy the options, just buy the stock.
Yeah, that's the Viceroy. Just buy the stock.
Don't buy the stock.
Don't screw around. All this stuff we talk about a couple hours a week, every week, forget about it. Just buy the stock. That's the Viceroy trade. I like it. That voice also clearly from Mr. Andrew Giovinazzi, a.k.a. the Rock Lobster, beaming in all the way from the great state of Maine by way of Option Pit HQ. Andrew, welcome back to the show, sir.
Thank you. Lovely to be here. It's a lovely day in Maine. Lovely, lovely. Maine a little windier than the market was today, I have to say. A little windier here than the market.
It's a shame you won't be able to join us this Wednesday, Andrew, but you'll be there in spirit. Of course, your other half, Mr. Sebastian, will be there, and I know you'll be beaming in somehow virtually with your mind to say, hey, wait a minute, that's wrong. You need to do that this way, or hey, I just found this unusual activity. Talk about this. All kinds of fun stuff, I'm sure, to come from Mr. Andrew.
Yeah, I will be there in some sort of spirit. Some sort of spirit.
I believe we have rented a Navajo shaman for the event, and he will bring you in spirit form for the event.
That would be I really, I think the Option Insider Radio Network is breaking all kinds of new ground, and I think it's about time for a shaman to levitate somebody in there.
So when
somehow create a doppelganger or something, if you will.
So when his counterpart knocks on your door this afternoon with the full shaman headdress, you know what's going on. He's just setting up the other end of the deal for the event on Wednesday. So don't be alarmed when you see that this weekend. You'd be amazed how much it costs to ship a shaman to the hinterlands of Maine. Not a cheap prospect.
I don't think so.
But we go to the lengths here at the Options Insider Radio Network for our events. And last but not least, joining us all the way from lovely scenic St. Charles, Illinois, is good old Uncle Mike Tosaw from RCM. Uncle Mike, welcome back to the show, sir.
Thank you. Always happy to be there. Coming off of a great day yesterday, celebrating the woman who birthed me, my dear sweet mother, and my wonderful wife who birthed my two children.
Yeah, I was locked in the hole working. I don't know what you're talking about there.
Yeah, I don't know.
Does that mean he's a birther?
I've been called worse.
I've seen you surfing those Obama late night tinfoil hat websites a few times, Mr. Tosaw. Now I know what you're up to there.
I don't even.
Yeah. I was going to say IRS, but I'm afraid I don't want to get.
Are you part of the Tea Party?
No, I'm just part of the Andrew all-day party.
Yes, the nonstop party that is the life of Andrew Giovinazzi. And before we go too far down that scary rabbit hole of the Tea Party, let's keep on rolling right on into the trading block.
The trading block.
All right, and those bells mean that it is time once again for the trading block. This is, of course, the portion of the program where we dial in on what was going on ye old street today with the S&P closing literally unched 0.0 on the day. It's been a while since we've seen that. The NASDAQ essentially unched as well, and the Dow pretty much unched as well. So a lot of unched going on around the street today. VIX cash essentially unched as well. It was pretty much a whole lot of nothing unless you look at a few individual names that were lighting up the old tape today. Of course, the old Widowmaker popping back up on the charts today with Netflix closing today at nearly 230, 229.35, up nearly 12 handles on the day, or 5.5%, kind of out of the blue, just the love for Netflix. Actually, I know what's driving it up. Actually, someone sent me this link today. And that made me think about getting Netflix myself. And that is, of course, the impending launch of the Arrested Development series on Netflix. If that isn't worth 12 handles in Netflix stock, then I don't know what is. I never had Netflix. I'm probably going to get it just for that. And that because my wife is on me to get it for that.
Are they the ones that sang Tennessee?
Tennessee? No, that's a TV show.
Oh.
No.
I was thinking of the band. I guess that's not an 80s reference. That's an early 90s reference.
No, this is actually a mid to late aughts reference. That TV show, Arrested Development, that everyone loved, critically beloved. They got canceled well before its time. They brought it back exclusively on Netflix now. I think it launches pretty soon. I wouldn't be surprised. I haven't looked at the news here in Netflix. Wouldn't be surprised if some of that is lurking behind the scenes because they know I'm signing up, and that alone, that's got to be worth a couple handles in the stock price, right? Andrew, what, if anything, caught your eye in today's sea of unchangedness?
I two things. Continued slide of the yen, not as fierce, but still sliding away. TLT, because we have a position in that, but sliding as well. And I think, on that 10-year yield is getting higher, so the Viceroy will probably be a little happier. And I think the market is deciding today. Also, I noticed strike volatility in the index was up today. Even though the VIX wasn't up, strike vol was up just a little bit. So, I think it feels like now they're sort of waiting for an announcement. And I think as these little balloons keep coming out in the press, the markets is like, you know what? The fact that we could pull some of this QE means the economy might not be doing so bad. And we can finally shake this financial crisis off our dust, or the dust off our feet until the next one, probably from Europe. Who knows? Maybe, they'll be selling gold mines in Africa. Who knows what the next crisis will be? But
the
for
Cypriot
now,
crisis.
It feels like there is some dollars and some growth, and even that, what is those animal spirits might be mixing again.
Animal spirits.
Yes, the shamans from Cyprus are on the move again, and they'll be the ones causing the next major disturbance out there in the old force. Mr. Tosaw, what caught your eye? Most of your beloved names were relatively quiet today on the old streets. Or anything catch your eye? Or was it a pretty high BBI today?
It was, today was a great day because we're short a bunch of premium. We're short some shorter term premium. On Friday, we put on a put spread in Apple at the 435, 415 level. So we're excited about that. Nice boring day. No complaints about that. We sold the 26 puts on Facebook for May week 4. So I don't even know how you even say the weeklies like that, but the one that expires next week. So we're there, and for the most part, with everything else, we're still leaving the upside open. So it was a boring day, but for the short premium, it's a good day.
And there are a few things cooking here in the after hours. We talked a lot last week about some of the gaming names like Take-Two and Activision. EA and Activision. Well, we have Take-Two, another big player in that space, coming out tonight, and they're just announced they closed today at $16.40. They're trading about $1 higher in the after hours, so it looks like a little bit of love coming in for Take-Two earnings out of that. Let's see that. There's like they went out about $1.35, $1.40 on that front month straddle there. So it seems like it's doing all right, but a wee bit of underperforming. Of course, the news just came out, so we'll see how that settles out in the after hours market. And Mr. Alex, we talked earlier about your event. I think we'll get to that more in the Xpress Block. But what, if anything, caught your eye in today's activity? A lot of people dialing in for ye old Netflix and Tesla over at OX.
Yeah, we were busy today. I mean, a lot busier than broad indexes. And one of Andrew's perennial favorites, Zynga, had a big pop today and was lighting up the desk. But
did you see news on that, Alex? I still was looking. I didn't see anything specific. I mean, I like the news, but I
did not see news. But what I do just before we go on the air is I kind of lean across the desk at the at the trade desk guys, at the option guys, and say, how was your day? What was going on? What was lighting up the phones? And the first name they brought up was Zynga today. And obviously, Tesla, Netflix, Priceline, that's who the OX customer is. They're a very option-centric, customer, and those names are becoming what I would call option-only plays. When I talk about if the stock is cheap, just buy the stock instead of the option, these things are getting to be so pricey and the moves are so big that, in my mind, these are becoming option-only plays. You simply don't want to own the underlying when it can pop 10, 15 a day, because you fear that day that it's going to pop 40 against you. These are instruments, these are names where you want to own the options, and if you want to spread the options or you want to buy leaps as an alternative. But we were busy today, much more busy than kind of the broad numbers.
Andrew, you must be loving those bullish risk reversals. You leg into any more calls, or you letting what you've got ride?
I'm just starting to buy straddles in July. I know, it sounds crazy.
Why don't you say that again for our listeners so we can have that on record? You are buying July straddles in Zynga right now.
Yep.
What made you take that leap from the risk reversal to just the straight up straddle?
Just the vol's so cheap. And I don't know, kind of always been doing this thing where it goes like to 3.5, 375 and back down to 3. So I thought it would be basically a good way if the stock kind of craps out again to load up. It's just the volatility's 50. It's 50 vol on a $3 stock. I mean, it's so cheap. There's almost like no theta. It's all like you buy it. You're going to have to work to lose money in it. At least that's what I think. So we'll see how
it plays into the old do stuff mentality. So you're liking this?
Definitely got to do stuff.
So you're liking this July 3.5 for about 63, 64 cents? That's your trade of the day?
Yep. We'll see how it works. I
see 2,000 of the calls went up today. Sounds like that's about your size.
Something like that.
Well, of course, I think the really big news today from an options perspective, and of course for what's going on in this space, there's kind of a bit of a double whammy today, actually, all on one single front. That is, of course, this max/jumbo S&P SPY contract. We talked last week about how the box got approval for that, and we'll get to that in a minute about how their early days may have gone. But on the flip side of that, just this morning it was announced that the Supreme Court, the highest court in the land, so we're not talking about the Illinois Supreme Court or anything like that. We're talking serious legal business here, refused to hear ISE's appeal. They've had this ongoing case against the SIBO, and they've been pretty much beaten at every turn by every local court and state court, and appellate court has essentially ruled against the IFC, and they've appealed it and appealed it all the way up to the highest court in the land, and the Supreme Court announced this morning that they would not hear that case, effectively ending the ISE's over 5-year bid now to try to claim a share of that SPX market and kind of challenging the legality of those proprietary contracts and exclusive licenses in the first place. Seems like, at least for now, those contracts are staying where they are, and no one is trading those. Now, the flip side of that, which is kind of weird, is that ISE has also been very active in trying to create alternatives to the SPX, like their previous Max SPY contract that they tried to launch last year. Of course, they immediately got shot down by the courts. It was a little bit different thing. They wanted to do more of a create their own proprietary index, or at least create their own version of the index. And I think that's what got caught up in the courts. Well, of course, Box went the route of just saying, hey, let's make a 10x SPY contract and see if that works. That got approval last week, and that launched on Friday. I haven't seen much really in the way of volume on that contract, and I've been digging. But a couple of interesting points on that. The weird thing, is that ISE got beaten on this statement this morning, and they've been very active in getting or trying to get a 10x SPY contract listed in the marketplace. But they come out today on the same day that they lose this decision and say, you know what, we're not going to list the Box contract because it might cause some confusion in the marketplace. So a lot of weird stuff going on there. Here's this name that's been very active in trying to break the SPX free of the SIBO, and now they have the first thing that actually seems to be a clear step in that direction, and they refuse to list it. I know, Alex, you had some interesting thoughts on this, because you're thinking it has to do with the fact that a lot of exchanges and a lot of trading firms simply can't get to Box unless it's through linkage. Is that what you're thinking?
Yeah, and NYSE Arca just came out a little while ago and said they're not going to list it either. This is the old story about, the hot dog factory. You never want to look behind the door, but everybody wanted this thing to break free. As Mark, as you said, ISE had a version of it, and now everybody is kind of I don't want to use the term backpedaling. I want to be a little cautious about what I say here because I'm still in the 401k at the SIBO and the ISE. But I think some of this is exchange politics. And if it turns out people aren't listing it, and people say they aren't listing it, the Spider's about 20% of the volume that's traded every day. So it's a big piece of revenue to all the exchanges. The SPX is a big piece of revenue at the SIBO, and it's obviously a a monopoly product, and as the Supreme Court said today, it's going to remain a monopoly product, and that means it costs a lot of money to trade there. It's that and the VIX are the two most expensive things to trade. Even though the spider generates a lot of revenue, they're still rebating on the spider, which means it's cheaper for the firms to trade spiders. But I have this concern that if the reason NYSE, ARCA, and ISE are shying away from it is A, to protect their spider franchise. Okay, that I understand. But if they're not listing it because of the box linkage issue, that's an ugly issue, because if you recall, if you go way back to the days of single list and multiple list, about the time the ISE starts, the Justice Department came down on many of the exchanges and censured them and cited them for not being competitive, for essentially single listing stuff. So I think it's fascinating to watch this kind of, work itself through. The Supreme Court, what the Supreme Court said today, I'm obviously not an attorney, but the industry has wanted competition in the space. And now that there is opportunity to have competition in the space, the industry seems to be kind of stutter stepping, which is problematic.
Yeah, it's an odd development, and listeners, if you want to hear more about what's going on behind the scenes here, I encourage you to go listen to our Options Insider radio program. That is, of course, our interview program where I've had all of the heads of these exchanges on in the past, and we've discussed this topic many times, including very recently at the OIC conference just a few weeks ago. I even sat down with Gary Katz, I think the one guy, the CEO of the ISE, one guy who has the most skin in this game, who spent the most money on lawyers over the past half a decade trying to break SPX free. And when I told him about the jumbo SPX, I thought he'd actually be a little bit more enthused than he was. He seemed to kind of backpedal a little bit as well. So you're right. I think there is a lot of some of behind the scenes politicking going on here. That's because they've essentially got what they wanted now. They've got their other version of the SPX, and yet for whatever reason it doesn't seem to be up to snuff, or it's not what they wanted, or it's not the version they wanted, or whatever the case may be. It's kind of the old, be careful what you wish for thing. Now you finally got it, and as a result of that, I'm sure the Supreme Court looked at that and said, why do we need to rule on this when the marketplace is already creating other products? I'm sure that was probably a factor in the ruling today. And so these things are happening in the marketplace, and to not take what you wanted for so long, it just seems kind of odd. So yeah, listeners, you can of course tune in to the Options Insider radio show. We have my conversation with Gary, Steve Crutchfield, the head of options over at NYSE ARCA, and a bunch of other exchanges to hear their take on it. In fact, today, I believe, my conversation with Ed Boyle, the guy who kind of got this whole ball rolling over there at Box, used to run options at NYSE ARCA, has moved over to Box now. This is kind of his pet project for many years. Finally got this product listed. My conversation with him should go live today, so you can hear more about some of the genesis behind that, why they're doing that. I mean, after all, you don't really think Box when you think of a big institutional-sized product. Box is very much in the retail sweet spot of the space, and yet they're creating this new SPX competitor. So maybe some issues there as well. But a very interesting development. The exchange business, the options market as a whole, has been clamoring for something like this for years, and now when they finally get it, they seem to not want it. So I don't know. I'm kind of scratching my head on that one. Weird developments. And speaking of weird developments, I think it's time for us to keep on rolling right on into the weirdest part of the show, the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody at home playing the whole game. Ha. All right, everybody at home playing the old home game. It's time once again to don your fedora and join us here in the old Odd Block. And first up is a name you may not be familiar with. We haven't really discussed it on the show before. It goes by the name Zynga, ticker symbol ZNGA. And if you ever come over to the Options Insider website and you see a write-up about Zynga on the site, chances are our good friend Andrew may be lurking behind that. He is a bit of a fan of this name. Of course, we touched on it earlier in the show. This one rallying about 7.5% to close at nearly 350 on the day, and just lighten up the tape from a volume perspective. Here's a name doing about 39,000 contracts a day of late, and that is somewhat inflated, but doing over 100,000 contracts today. Of course, Alex would rightfully point out that this is a $3 stock. You could just trade the stock, and a lot of these options trades are kind of stock surrogates, but still spending 30 cents on a $3 stock option, not sure that would rub Alex very much the wrong way, but yet nevertheless we shall discuss it today on the old show. We saw a lot of, following suit with what Andrew was saying earlier, a lot of love for the calls, not so much straddles here, but a lot of call buyers lighting up the old tape, particularly not in July, but in May. We saw 14,000 of these May 3.5s. And Andrew, when I first saw that, and I saw it was calls going up in Zynga, I said, that's Andrew right there. That 14,000, that's about his size. Am I correct?
I'm a part of the 14,000. 14. No, what struck me was just the fact that there were buyers of these calls at all prices today. The one block I picked there, 415 for a nickel, but it's funny. This is reminding me something of like RIM in like November when RIM was like $6. And just as a week of expiration, it was just it was a lark. But I'm like, the stock feels like it's really going to rally for some reason. And it's like, calls that were trading for 3 cents went to, 85 cents or something like that. It was like the 6 or the 7s, or I can't remember. But rallying for really no reason, no news. Couldn't quite see why. Normally it's been rallying on the gambling stuff, the potential. So I just, anyway, I thought this definitely worthy for worry for the odd block, just real buying. And the thing that I saw was funny because you're saying straddles, but the volatility is still in the 50s. It's not very volatile. I mean, the trailing volatility is much higher in the stock. So, who knows? We'll see. But people were buying calls. They were buying stock and buying calls today. Buying it all.
Yeah, it looks like some people were rolling up here too. I see about 35,000 open on the June 3s and 3.5s equal.
Yep.
And about 27,000 of those went up today on both strikes. So it looks like someone was rolling on up from the 3s to the 3.5s, thinking there's a lot of juice left here in good old Zynga.
I didn't. When I posted this, I didn't see that volume. But yeah, definitely, I think. And you're also seeing some stuff farther out, like buying the 4s, things like that in Jan 2014. So I mean, there are just buyers of calls. I mean, we haven't seen, we'll notice a bull market when people are buying calls. Of course, everybody forgot about the last. It was weird last year. What was the low last year? 1250. The SPX a year ago, I think. Yeah, definitely just call buyers and.
So yeah, you're not alone in your love for Zynga here. So we'll have to keep an eye on this one again. Of course, we have been keeping an eye on in the past to see if this 3.5 level is the ceiling, or if they're going to challenge for 4 anytime soon.
Yeah, I think the new one is 4. It needs to make the run above 4 if it's going to do anything.
Yeah, if it's going to get those straddles to work out for you. It's got to get a little bit of life in it. Yeah, you're right. I don't see the news that's driving all this. So I don't know what's going on at Zynga land. Maybe Farm Bill 2.
Well, they released a game, but everybody's known they released a game. They've got some, The thing is that the thing that makes the company a wild card, really, ultimately, it's not a very expensive company. It's trading at one-time revenues, and there's a lot of cash, and they own a building. It looks to me like a kind of a value type play. But obviously, if nobody buys their games anymore, or does anything, then it's going to just be in the can. But they'll probably figure it out.
You don't think of much value when you're talking about a company whose most of their assets are, in an app on your iPad, but perhaps there's something lurking there in the distance. Speaking of lurking,
look at Angry Birds.
that would be Rovio. If they bought Rovio, that would be. I think someone else owns Rovio. I forgot who it is, but they're the ones who made Angry Birds. So they're the ones who have been printing money all the way to the bank. They've shown how.
It's like my kids have pillows, Angry Bird pillows.
Yeah.
Jeez.
My little guy was like 2 when he knew what an Angry Bird was, so
it's
crazy business. Speaking of crazy business, let's keep on rolling with the odd block here into VXX. Perhaps a name you've heard of in the past. We've discussed it once or twice on the show in the past. In fact, it is the number 3 exchange traded product by volume, which is insanity to me, but nevertheless it is the case, at least for the time being, until something else even probably crazier usurps it. We saw a lot of interesting opening paper here in the downside puts, the 17 puts. Of course, VXX being, of course, the ETN that tracks the VIX. I think you can use that term loosely, but it does attempt to track it. Closed today at $18.38, pretty much unched on the day. And a lot of people coming in with a big 10,000, actually, I'm sorry, a 23,000 lot of these May 17 puts, just blasting them out for a dime. Total of 34,000 on the day. So a lot of interest here on this May 17 strike. Went out about mid-market, 8 cents at 12. So not a bad trade, still holding up right now. This one caught your eye today, Andrew?
Yeah, I'm still not sure if it was a sale or not. I mean, it went up a sale, but it's a pretty bold sale because there wasn't any open interest. I mean, there's open interest, but this is clearly an opening trade for a dime. And, there's a pretty good amount of future premium in the VXX right now. I mean, it wouldn't take a lot for the VXX to get, down to 17.5 or 17.25. These dime puts might get a little scary, but I wouldn't have sold them for a dime. But somebody did.
Yeah, that's a courageous play, particularly in a name that we've mocked so frequently for performing somewhat erratically. You never know when it's going to tick down.
It doesn't really perform erratically. It just goes straight down.
Well, I guess that's one version of erratic when you want actually to track the VIX. But, c'est la vie. It doesn't need to actually do what it's supposed to. It's just got to do something, and people will clearly trade it.
350,000 contracts today.
Madness. 350,000 contracts, up about 30,000 contracts from yesterday, and a whopping 27 million shares. It's actually low on the shares today. It's averaging 53 million shares a day lately. So this thing is just out of control, and I really don't understand what the impetus is behind it, aside from the fact that it is the best in a sea of pretty paltry competitors, and so they win by default.
But again, implied vol coming up in here a little bit today. That's why I was a little thrown by the sale. But it was a dime bid. Somebody did hit it, and more likely than not, they sold it. But it wouldn't surprise me if that was actually a buyer sneaking in. That was a resting bid. Was really the intent. And somebody just whacked it out. So we'll see.
Speaking of seeing, let's keep on rolling right on into what's going on. Let's see what's going on in the solar realm with Solarcity Corporation, ticker symbol SCTY. This is a company that designs, installs, and leases solar energy systems to residential and commercial customers. They closed today $35.88, up a whopping 7 handles. So some movement going on.
I have 2 words for you. Elon Musk.
There we go.
He is the chairman of this company. It's something in his sphere. So I guess if you're somebody, the stocks just came out at $8. So if you short a company that he's involved in, you're going to take it right up the you-know-what. I guess that is the new world we live in.
Yeah, the man can just tweet about it and drive the stock price up a couple of handles. It's off about $1 in the after hours, $1.50 to 34.25. But yeah, it was up 7 handles today. So needless to say, a lot of activity going on out there today. It's the name that does 800 contracts a day, doing almost 30,000 today. So lighten up the tape. Of course, when you see a 7-handle 25% move like that, it's going to engender some options volume. Looks like we saw a lot of activity, particularly in one strike, though, which is unusual for a day like this. We saw a lot of activity on these June 30 puts. Tell us what caught your eye out here on these June 30s here.
Just how wrong the buying was.
I love that. We're going to highlight you because you are so terribly wrong. These guys stepped way in front of the train today.
You know what's amazing, though, is the vol is up so much in June, up 34 points, that these puts were trading $4 and $4.20 this morning, and they're trading like $3.10 now, and the stock is up like $5. So the person actually who bought these puts didn't lose near as much as they could have because the volatility just kept exploding. That was crazy about it. Because at one point they were down to around 225, whoever the buyer was took like a 50% haircut right away. And with the vol getting jacked, they made $1 back. It's pretty amazing.
they got their luck on their side. Well, not luck, but a little bit of good fortune sprinkled on top of them. Yeah, you're right. This is the kind of thing as the hallmark of someone who thinks he knows what's going on. Dives in really early. These trades went up early before the move, so he was looking to get in ahead. Maybe he thought puts were calls were puts. He listened to our episode on synthetics, maybe, and didn't realize he needed stock to go with it. I don't know, but interesting. This is a good one. I'm actually discussed this at our event this week because this is a good example of when not to jump on the insider bandwagon, because this guy clearly was on the wrong lane of the highway and got run over for his trouble.
Yeah, I mean, literally by the time I wrote this up, after I saw this buy, my God, he's already gotten taken to the woodshed. The only thing where he could be a winner, I said, possibly, it could be, somebody that's long stock and they're looking to protect, which is a sizable gain. I mean, the stock was an $8 stock not very long ago. So, could be just be a good way to put themselves out of their stock if necessary, but pretty expensive way to do it.
Yeah, that's an expensive way to do it. Interesting stuff. We'll keep an eye on this one, of course. It's gapping up. Maybe he's the same guy who decided to double down and jumped in on the 4,000 of the May 35. He said, hey, I was wrong the first time. Now I'm going to buy these May 35 calls, and we'll see what happens there. 4,000 of those went up as well. So maybe that was him saying, I got to get back in and try the other way this time.
I think with Tesla and how vicious these short squeezes are now because of Reg Show, it can become a very nasty place very fast.
And speaking of nasty places, it is time for us to leave this nasty, nasty place known as the Odd Block and keep on rolling right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where the Viceroy takes the reins, and I get to take a seat. And Senior Viceroy, tell us a little bit of an overview of what happened at the big Schwab OX shindig this weekend and what kind of stuff our listeners missed out on if they weren't able to attend.
Well, first of all, they missed an outstanding event, and there was lots of free food and alcohol, but that's secondary. I'll tell you a couple things that came out of the event, which were kind of curious to me. The Options Express customer and the Schwab customer are two different profiles. The OX customer is a little more transactional and a little more their focus is the derivative community. So they are more likely to be trading options on Zynga or Tesla or Apple. The Schwab customer is a little more likely to be trading the cash. They're more likely to be trading the Apple or the Zynga stock itself. And at lunch, I was moving from table to table, and one topic that came up a lot was how much stuff they have, how much of what I'll call the household names, the Boeings, the Exxons, the Pfizers, the Lillys, that people have written covered against and have had to adjust or lose some stuff that they weren't that happy about. They were very yield hungry, which has sort of been the case for a couple of years now that there have been no rates. So I'm going to take a few seconds here and renew my call for either weekly or quarterly cash settled equities, because I think that's a legacy issue we live in the options market with, and it drives a lot of people away, because if you're selling in a low volatility environment and you are yield hungry and you've owned your Boeing from $75 and it's now $94, you're going to go sell some June 95 calls for 22 cents, and then you lose the stock. And so you sit on the sidelines. But I'm kind of renewing my call for the industry to look at cash settled, especially on the big cap, on the stuff that's kind of a sleeper to most of us, because, we don't talk about the Boeings and the Lillys and the Exxons, and yet in this market, they're moving through strikes, and I think people would be a lot more active in them if they could harvest a little premium, but keep their friction down. And friction, no matter how low your transactions costs are, friction starts to be a big deal when you're selling stuff for, 10 cents, 12 cents, 16 cents, and then you end up losing the stock. So that was a topic a lot of educating people on how to adapt a covered right trade, how to adjust the covered right trade, when to think about rolling a covered right trade. But yeah, it was a fun event. It's always good to see people, and it's always fun when people are looking for the Viceroy, and all the Schwab people are kind of looking around and going, "Are they asking for cigarettes? Is that a strategy?" So it was great to meet a lot of people, and it's always wonderful to see how many people listen to the podcast and have the good sense to kind of hunt you down. So it was a fun event. Was a fun weekend. Big event on Saturday. Of course, Sunday was Mother's Day, so it was, just on a personal note, it was fun to spend time with my wife and kids. And as I say, today was busy.
Yeah, always good to bring mom out to the big OX event on the weekends. They tend to appreciate that when they come to an options event. At least they get some time in sunny Chicago, and it is quite sunny here today.
Yeah, and it's a cheap date, too.
Yeah, that's true. OX paying for the food and drinks. Now, Alex, we should reiterate before we close out the segment here, we were talking about the jumbo spies earlier. I'm sure a lot of people are wondering, how do they get to those on the OX platform? And right now, you guys currently aren't trading those, correct?
That's correct. And my friends on the street are all kind of telling me the same thing. And everybody is saying it's kind of a wait and see. I'm going to get into some hot water here. I think this product is worth a shot. I think this, democratizes the trading in the SPX. And, Sebastian and I have arm wrestled over this a couple times. I think the product needs a shot, and it's going to be interesting to watch the exchange community, the brokerage community, and the hot dog factory here to see what happens over the next few weeks.
Yeah, it will be, because it's certainly, if they've bellyached for all these years about some sort of alternative, and one finally comes along and they let it wither and die on the vine through their own internal political machinations, then that's on them. They had their shot and they kind of ruined it. So,
and we as an industry need to service our customers. I mean, I hate to sound like, Billy Graham preaching, but if the exchanges are protecting franchises and revenue, then innovators and some of these small exchanges are going to snipe away at that. And that's how small exchanges become big exchanges. I mean, when we started the ISE, there were days where, I don't know that we ever voiced this, but there were days that we thought we were going to run out of money and burn through the raise. And, would we have a chance? And we established a niche of electronic, open. It's exactly the same niche that the Options Expresses, of the world have. And that's why this firm, Options Express, starts when the ISE starts, because that's what democratized it and flattened it out. When I worked at the SIBO years ago, before electronic execution, you'd walk into a crowd and say, what would it be like if a new market maker walked into here? And the crowd would say no market maker would ever walk into here. They'd never get an order. The brokers simply wouldn't deal with them because of the, kind of the historical issues, the legacy issues. And then all of a sudden raise came and volume doubled. So we need to keep a close eye on this. It's going to be interesting to watch.
Raise, of course, the acronym for Retail Automated Execution Systems. For those of you out there who aren't familiar with the lingo, that was really the first kind of automated electronic execution for small retail orders, 5 lots, 10 lots, that sort of thing. They started being randomly assigned through people throughout the pits, and well, not randomly, they were in an order. But yeah, interesting stuff there. Maybe we should do a whole show someday on linkage and how this stuff works and why orders are routed to certain places and all the kind of voodoo that goes on behind the scenes. That might let listeners understand a little more why some exchanges will right now be reticent to link to and drive and direct some of their flow over to Box and away from their own exchange. Might be some interesting insight in that. But for now, we have to close out the old Xpress block and keep on rolling right on into the strategy block.
The strategy block.
All right, and that music, ladies and gents, means it is time once again for Uncle Mike Tosaw to throw on the old smoking jacket and grab his brandy glass and sit on down by the fire. Of course, the fire might be a little bit much today. It's a little warm here in Chicago. Maybe we'll hold off on the fire and dispense some options, wit, and wisdom. And Uncle Mike, what's cooking over in the land of St. Charles? You know, those birdies, I know they've been moonlighting for you, but they still do work for me. And they've been whispering in my ear all day about annuities, and that you're back on the annuity train. I know you had your legendary rant about annuities. Sounds like you're fired up again about ye old annuities. Am I correct, sir?
You are. And before I get into this, I want to just emphasize once again, not all annuities are a bad thing. What I want to emphasize is that if you have the right education and you understand what you're getting into, annuities can be a wonderful thing, but they're a tool, and understand how to use the tool. So with that, I have clients in annuities. There's times where they make sense. I think I'm convinced I'm the only man in the world that combines annuities with options, but that'll be a talk for another day. But once again, annuities are a tool. And just like you wouldn't use a saw to pound a nail in, if you're looking for an annuity to be something that takes care of all your financial needs, you're looking in the wrong spot. You need to look at a lot of different things. Came across an annuity wholesaler a couple of weeks ago, and so he said, so Mike, for your clients that are considering taking Social Security at 62 as opposed to 66 or 70, we have an idea for you. I'm like, oh, okay. You know, that's always a question I have a lot of clients that are on their late 50s, early 60s. So I'm like, okay, I'll gladly listen to that, because everyone's looking for that, and a lot of people want information on that, and income's a big topic these days. So wanted to hear what he had to say. And so he said, well, what we can do is if you combine our 8-pay annuity, meaning they'll pay you a certain amount for 8 years, what people can do is postpone their Social Security from 62 to 70 of when they're going to take it, and it becomes more beneficial to them. I thought, oh, well, this sounds interesting, because typically whenever I do the math on this, and everyone has a different situation for work, if you need income, whatever the case may be, as to what makes more sense to when you should take your Social Security. But typically when I do things like that for clients, it usually makes sense to do the Steve Miller approach, take the money and run. Just take the money early, because of the fact that a lot of times just with Social Security, you have to live till age 82 or 84 a lot of times for your break-even point on when you're going to actually benefit from taking Social Security later with a greater payment. So went through it and I said, okay, well, how is that possible then to benefit by taking it later? And so we went through it, well, with this annuity, we can provide the same stream of income from age 62 to age 68, or I'm sorry, from age 62 to age 70 that they would get with Social Security at that age, and they'll be getting a greater amount of money at age 70. I'm like, okay, well, this sounds interesting. How much will it cost to get that? So we went through the numbers on it, and here's what it was. We went through it, and he said, so I said, okay, let's just use a number here. Let's say that someone wants to get $1,000 a month. So do the math on that. That's $12,000 a year times 8. That's $96,000 over the course of 8 years. So for someone to get that $96,000 over the course of 8 years, how much money do they have to pay your insurance company? Oh, that would be about $97,000. So I'm like, okay, so you're saying that to benefit and take Social Security later, you're actually going to have to pay you, the insurance company, $97,000 to get payments that add up to $96,000 over the course of 8 years. And this is your new hot product? He said, yeah, it's great because of the fact that they get this income. And I said, well, what's the advantage of doing this with you as opposed to just putting the money in a shoebox? You're better off in a shoebox. And he really didn't like my attitude on that, and the conversation quickly changed. So, moral to the story on this is that if you have a hot product in the annuity world, in the insurance world, be wary if you have them trying to combine it with something else. A lot of times people like to combine long-term care insurance with life insurance. And in this case, this is a new one that I hadn't heard of, combining an annuity with Social Security. If you look in the fine print, if you look what it actually is, it really isn't that good in this instance. Once again, annuities are not a bad thing, but be very wary when you hear people trying to combine one thing with another as like this great easy package to solve all your problems. Now, on to the strategy section for the day. I want to go over the ratio spread. We have a ratio spread webinar coming up this Thursday night that I will be doing. And the way with which I want to use it right now is that with stocks priced high like this, what's another way to get into the market? Now, I've talked on the show in the strategy block about how buying call premium, I think if you're still bullish and you want to get in when the market's higher, that could be a way with which to do it. Because of the fact that, in my opinion, I think volatility is on the low end right now. But once again, to quote a great man, aka the Viceroy, vol's low only if you think it's low. I think it's low personally. So with that, I think it's a good time to be buying option premium. However, let's say that you're a stock person. You like to buy stock. Now, here's an idea that you may want to consider if you're looking to get in, but you don't want to go all in, so to speak. I'm going to use Apple, and the reason I'm using Apple is because, full disclosure, I have very minimal stock holdings in Apple right now for my clients. We have a little bit, but nothing like we had in the old days. And I would not, I repeat, as a stock buyer, I would not buy the stock right now. I think the way to play Apple is the put spreads like we've talked about in other segments. But let's say that you're bullish on Apple right now, and normally you would buy 200 shares of it. Now, this can apply to a lot of different stocks. I'm just using Apple because it starts with an A, and it was the first on my watch list that I pulled up as I was doing this. Let's say normally you would buy 200 shares of this, and your profit target would be sometime between now and we'll just say August. You want it to get out of it probably around, let's say, the 485 level, from 455 to 485 between now and August, let's say, or possibly later, possibly earlier, whatever the case may be. Well, instead of buying 200 shares, buy 100 shares. And the reason I say that is because, remember, we're nervous about getting in at the stock market being this high right now. So you buy 100 shares, combine that by a 455 call for August. And once again, I'm shooting from the hip right now, folks. I just want to give you just one example, and hopefully this gives you something to where you can kind of go down the road yourself. 100 shares of Apple, long 1 August 455 call, simultaneously sell 2, not 1, but 2 485 calls. 455 calls right now are trading for around $24. 485s are currently trading for a little over $12. By doing that, you're actually creating a credit. The 2 calls that you sell at the 485 level will finance the call that you buy at the 455 level. So with that being said, what then happens, and I'm going to start by just doing the expiration day risk graph here, just so we can kind of understand it. What happens is you actually then have double leverage on Apple from 455 to 485. So if your price target is 485 and you're concerned that Apple is going to go down, or you don't want to necessarily buy 200 shares, you're a little bit nervous about it, but normally that's what you would do, then what you can do is buy 100 shares, create a ratio spread. You'll have twice the upside, but only 100 shares of downside. Because if Apple goes down, then all those options expire worthless, and it won't affect you one bit. The only risk you'll have is the 100 shares of stock that you bought. Now, with that being said, 2 questions come up. First one is, well, Mike, I just sold 2 options. and I only have 100 shares of stock. Aren't I naked to the upside? Not at all. One of the calls with which you sold is covered by the stock, traditional covered call. The other call with which you sold is covered or hedged, so to speak, by the 455 call. So you're essentially selling a covered call to finance a bull call spread. Now, the second question comes up, well, Mike, what if it goes up too soon? What if when should I get out? What are some techniques that I can use for managing this? Because this isn't, I trade in reality. I don't just trade in expiration risk graphs. I mean, something's going to happen sooner. How do I manage it if it goes down? What do I do? Well, the answer to that question is watch the ratio spread webinar this Thursday night for RCM. And that is the strategy block for today.
The man's learned to tease on his time on the old option block. Good stuff there, Ster. We'll have to dive into that annuity stuff in a little bit more because that is just appalling stuff, especially when you look at the actual numbers. But for now, we have to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and those car horns means that it is time for our final segment, Around the Block. This is, of course, where we look at what's coming up for the rest of this week, what we're keeping an eye on. And starting off with you, Uncle Mike, what are you watching for the rest of this week, sir? Aside from planning for the Great Ratio Spread webinar on Thursday night.
Aside from the Great Ratio Spread webinar, I'm watching just, once again, the market in general. We're still kind of we're gradually eking higher, so to speak, based on Friday. The S&P we're flat today, but just curious to see when something's going to happen. Just watching the general numbers.
A lot of numbers kicking around these days, that's for sure. A lot of names making new highs, a lot of names hovering around some all-time highs. So certainly a lot of time for options traders to start picking and choosing their levels and picking and choosing their entry and exit points. Speaking of entry and exit points, Mr. Andrew, what are you watching over there in the land of the pit?
I am mostly, I'm still looking at, besides Zynga, but that's July, so I really don't have to look at it too much. But watching how the market reacts to these balloons. I mean, I keep balloons about the Fed stopping their bond buying program. I actually think the market's probably going to handle it pretty good because maybe this big cloud of financial crisis will finally be lifting. I mean, it's clearly been it feels like it's been out of the stocks for some time, probably since the day after the election, I guess. So. That's really the main thing. We're also, we are looking at watching Tesla trade and see if there's any interesting trades. It's just been hard to get positions on in there that don't cost an arm and a leg. But mostly I'm keeping an eye on volatility, keeping an eye on treasuries and the sort of the same old thing to see if we can, because I believe we're going to end up higher at the end of the year than we are right here. That's my closet prediction.
Good old Tesla. They are indeed the modern-day cowboys in many respects. Of course, I've heard there's some controversy about their firm, perhaps even a radio controversy or two, a great radio controversy even. That's for Sebastian if he's listening. Those are some 80s references to old Tesla albums.
Hey, Mark, love finds a way. That's all I got to say.
There we go. All right, thank you for that, Andrew. And last but certainly not least, Mr. Alex, what are you keeping an eye on over there in the land of OX?
A handful of earnings reports, Cisco, JCPenney, Walmart coming up in the next couple of days. And other than that, we're keeping an eye on, as Andrew pointed out, the macro market, the yen, the euro, the stealth rally in Apple, and, just the big three that are moving 10 points a day, Tesla's, the Netflix, and the price lines.
I don't know if you know this, Alex, but we tend to avoid the Cisco whenever possible. It's a very painful memory for Uncle Mike. So I was going to leave that one off the Around the Block just because it's too painful. The wound is still too fresh.
I'm over it. I hit
know.
myself in the head for that. I'm good with it now.
You've done your...
You know what, though? One day we should do a show on what the indexed annuity companies do as a strategy, because customers could do that with the SPY or the SPX, and it's fairly easy to do.
I built a career on it.
Might not be a bad show. So there we go. We'll keep that one in mind. Thank you for that, Alex. And unfortunately, that's all the time we have for this episode of the Option Block. Before we go, I like to check in with all my cohorts and partners in crime. Of course, coming up this Wednesday, we have the Options Insider Unusual Activity Forum, Wednesday, May 15th. One last time for you to sign up before we close the rolls on Tuesday afternoon. TheOptionsInsider.com/events. If there's one or two of you lurking out there who've been listening to the show and still, for whatever reason, haven't signed up, that is your chance. Of course, if you're not in the Chicago area, don't fret. We are going to make some sort of version of this available after the fact, so you can download it or stream it, or maybe even get it on your medium of choice. So stay tuned for that. And Mr. Tosaw, how can folks get a hold of you and they want to register for this upcoming webinar on Thursday?
One of two ways. You can either go to rcmaccess.com, or you can send me an email, and I'll personally email you an invitation, mtosaw@rcmam.com.
There you go. Get a personal invite from good old Uncle Mike himself for the old webinar. And Mr. Andrew, what are you watching over there in the land? I'm sorry. And Mr. Andrew, what is coming up in the land of the pit, as if we didn't already know?
We have this small event coming. What is it? Wednesday, Thursday, something? Or
it would be Wednesday, May 15th.
The Unusual Activity Conference. But we also have another one. We have why people need to take the gold course, the Option Pit Gold course. We're doing a free webinar on the 22nd, May 22nd. Basically, we kind of open up the hood a little bit, and we show people, why you need to understand how options work. That helps you trade them. And that's basically, we wrote up a webinar for why you need to take the gold course, and to basically explain why what we do at Option Pit's a little different from all the other folks out there.
All right, thank you for that, sir. And last but not least, Alex, the big OX shindig is behind you. What, if anything, could possibly be on the radar that could rival that, sir?
Well, we're clearing the decks for Wednesday because we're excited to come over to the SIBO and watch the presentation. A couple things going on tomorrow. At 2 p.m., we're doing a webinar on Theta. And then at 7 p.m., I'm going to do Idea Hub. We're doing a couple evening webinars tomorrow. So 7 p.m. is Idea Hub. And at 8:30, we're doing a Selling Puts webinar. All you have to do is come to optionsexpress.com, go to the Education Center. You don't need an account. All the events are free. So a couple interesting webinars. Saturday, the crew's going down to Charlotte and doing an all day in Charlotte. And as I've mentioned before, we simulcast those. So if you want to sit home with the dog on your lap in your smoking jacket and ascot, we do those live on the site. And they're interactive. You can ask questions just as if you were there. But looking forward to Wednesday, an exciting day at the SIBO.
Indeed, an exciting day at the SIBO. We hope we'll see you all there. And of course, on behalf of everyone on the old Option Block All-Star panel, I want to thank all of you in the listening audience for downloading and streaming and subscribing to this program and making it such a success. If you have some questions or comments you'd like us to answer, by all means, shoot them over at questions@theoptionsinsider.com. Just be sure to put question for the Option Block in the subject line, or you can find us on Twitter or on Facebook, or just leave a comment on the website. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.